All right. Well, we're about a minute. I'm gonna give it a couple seconds here. I'll fill in the gaps with anybody who's just joined. Our playlist today is Stella Starlight, and the song is called Don't You Forget About Me, because we have a tendency to forget some of our operating expenses. Okay, here we go. Are you ready? Sorry, there we go. Okay, we're day 3 of our epic 10-day adventure. Today we are calculating our operating expenses. So this, yesterday and the day before was really about taking a look at historically what was happening with your numbers. So from that exercise, why we do it is because we want to see what was working, what wasn't working, where were we spending too much money, where were we spending too little money, right? I left you with that list of questions. So hopefully now, as a result of going through those questions and answering them to the best of your ability, most importantly, the whys and the whys nots, we can start to now pull together the operating piece, the operating expenses. We can start budgeting for profit here. Just a couple quick housekeeping notes. I want to say thank you. There were a few of you that mentioned to me that this step 2, I kept referring to it as highways and hazards. That's the exercise in your worksheets. It's actually called Review the Findings. So I just want to draw your attention to that. I want to give a shout out to Jared. Thank you for that tip on how to break the frozen pane. Really, it was a pain in the butt, wasn't it? But that frozen pane or that split screen. So again, that was in yesterday's email, how you get rid of that. And now all the tabs just nicely line up. So that's a little easier for us all. And then I actually received quite a few questions from you yesterday on how to recognize specific revenue. So whether it was the WIPs or the work in progress or the deposits, or some of you were mentioning that the way it's not so much the service, but you get paid either through insurance agencies, right, or government agencies. So let's leave that for the time being. Tomorrow, we're going to talk all about revenue streams and how to account for everything. So I just want to let you know that your questions have not fallen on deaf ears. I just want to maximize our time today for operating expenses. And tomorrow, I'm going to show you, I'm going to make some recommendations, basically how I do it with customers on how we're going to recognize the various revenue streams, more importantly, or I guess the other language, the buckets that we use, and how they attach themselves to the products and services that we offer. So I just wanted to bring those 3 points up in case anybody's got some questions still around those, and make sure that I'm keeping up with all the amazing questions that you're asking. I also want to just give a shout out to all of you. Thank you for asking your questions. As I mentioned before, this is the first time I'm doing the challenge online. So when you give me this feedback around, I'm confused about this, where do I put this, what would you recommend over here, it really helps me to figure out how to start molding this and shaping it so that it works for you going forward. So thank you, thank you, thank you. Keep them coming. No such thing as a silly question. Love them. Okay. So here we go. We are now going to move into our operating expenses today. So now the history is behind us. Now we are planning going forward. So a couple of important pieces. The first thing that you're going to use today is step 3. So it's tab called Step 3 Forecasting for Profit. I'm going to try not to mess this one up today. And you will see that basically it looks very similar to a cash flow projection. Right now, you're looking at my demo one. This is why it's full, but full of data, but yours is not full of data. You've got lots of zeros and slashes right now. You are going to be filling this out, and I'm going to show you exactly how to do it as we go through this together. So a couple pieces about this worksheet. Important tip number 1. We are only going to enter in data into the pale yellow areas. That's it. Anything that is pale yellow is where we enter data, regardless of whether it's up here under assumptions, under price, under cost of goods. Everything else for you should be auto-populated or formatted. with respect to your calculations. Okay, so that is tip number one. Tip number two, before I get into this and I forget about this, this is really important. I'm going to show you how you're going to start filling this out. But in case I forget, I want to remind you that this is your opportunity. I almost call this our Dear Santa list, right? This is your wish list, because I want you to start thinking like a CEO, a chief executive officer of your business. This is no longer about bootstrapping. This is about, what does your business need to be operationally sound and effective? Most of us, if we have started the business ourselves, we have been accustomed to this feeling of, I'm going to do that. I'm not going to hire someone for that. Oh, I dare not invest in that because I might not have the money, right? It's interesting, when we start looking at some of these expenses, you might recognize some familiar language from your personal budget coming over here into your business budget. So instead today, I really need you to think about, what does your business need to operate effectively, especially if you weren't in it, right? So if you had to hire a general manager for yourself, what would you need to pay them? What's a fair market salary in that space? So again, you're going to put your CEO hat on today and start going through this line item by line item. Okay, so now that you've got the tab open, here's what I'm going to recommend you do. Yesterday, you already started to categorize your expenses into 4 buckets of either team and personnel, space and operating, sales and marketing, or other. You already have those buckets established. So what I would recommend you do is that you go back over to your chart the data, and you can either cut and paste these, or it might just be simpler and more effective for you to just start typing them out, again, writing them out in here, going, okay, under team 1, we know we had these expenses. So you just start putting in the label here. So I'm going to recommend that you start all the labels, and then we can start carrying over some of the costs. So when we look at the labels, you may have found yesterday, as in this example, if we look back to this construction company and we look to see their people expenses, under team and personnel, all they had accounted for were professional fees and accounting. You may recall that they had put their wages and their salaries here in cost of goods, right? Wages and benefits. So I am going to recommend, if I didn't mention this before, I'm going to mention it today, that when it comes to employees of your company, so those individuals that need to get paid, regardless of whether or not you sell anything, we are going to list them here under team and personnel, right? Because they need to get a paycheck. And as we're talking about this, just a reminder, just so I can clarify with you, and I'm going to be putting this in an email to you. The operating expenses of a business, otherwise known as indirect sales, operating expenses, or OpEx, as they're commonly referred to, these are expenses that your business is going to incur regardless of whether or not you sell anything. Right? If you've got a retail shop, you still need to get inventory in there. You still need to open up the doors. The lights still need to be on. You probably still have someone at the till. You're still answering the phone. So regardless of whether or not you sell a dime, you still have operating expenses. The same is true in a service-based industry. The same is actually even in all industries, whether it's software for service, whether it's professional services, whether it's product related, whether it's manufacturing. You are going to have expenses that you will have to pay regardless of whether or not you get anything sold that month. That is what we are talking about. And that is going to be a big piece of our distinction between whether or not we're going to put that expense into the operating, so into the bottom piece of it, operating or indirect, or whether we are going to account for it in direct expenses or cost of goods. We're not going to touch cost of goods or direct expenses until Friday. So just, we have to start understanding the difference. Operating expenses, expenses you incur regardless of whether or not you sell anything. Direct expenses and cost of goods are costs directly attributed to selling that product and service. You would not be out of pocket unless you actually sold that item. So I'll make that clear on Friday when we go through that. Today's operating expenses only. So back to this example of team and personnel, you'll remember that all they had was the accountant, and I think they had professional fees. So here we added a few more, such as salaries, right? So this was two partners. The two partners both needed a salary. They were both working in the business full-time. For those of you that have gone through the Money Mastery Matrix and you now know what your magic number is, I would actually like you to put that magic number here as your salary, because what we're trying to do is what we are in the process of doing is getting your business into the position that it can pay you that salary that you need to take care of everything at home. And don't worry, if it's an exorbitant number and that's not a fair market salary, we can figure out how to divide it later between what you pull in every month and what you take as a dividend at the end of the year through your net profit. If you have not gone through the Money Mastery Matrix program, I am going to ask you to calculate what a fair market salary is for you as a general manager or a CEO of the business. And I am going to find the link. There's actually, I don't know if, I think it might be called PayScale, but it is it's a website where you put in your location, you put in your type of business, you put in size of business, and it will give you some averages with respect to the salary that you could expect to have to pay somebody to fill your spot in terms of running the business. So there's no more skimping by on 2,500, whatever it is that you're paying yourself. Even 5,000 is definitely borderline here in Canada. So you need to start planning for fair market salary, because I'm going to tell you this. Any of the expenses that we do not budget for here in all of these areas, whether it's team, personnel, space and operating, sales and marketing, or other, if we do not budget for them here, and we end up incurring them at some point, guess where that expense is coming from? Guess what bucket? I hope you're all raising your hand saying, oh, it's coming from our profit bucket, because that's exactly where it's coming from. If we don't budget for it here, it just comes off our bottom line. This is why we're operating at a deficit or a 2 to 5%, because we're not budgeting for all the true costs in addition to the cost of sales, right? So it's interesting when I work with clients, the first thing they think that I'm going to do when we start doing a business budget is they think I'm going to slash operating expenses. And the opposite is true. In every single case, I have increased operating expenses because they were operating like a home-based, and there's nothing wrong with a home-based business, but I want to make sure that you're an operational business that thrives, where the expectations of customers are being exceeded, right? So truly efficient, truly operational. Okay. So I'm going to come back to additional expenses in a moment. But again, the first thing you're going to do is you're going to write down the expenses that you know that you've already had from previous years, because you did that exercise yesterday. As a result of answering the questions, you might realize that there's additional people to budget for, right? So I want you to write those people down here. In this case, they forgot about the lawyer. They actually have to do an annual review of their specific business that they had to budget for. Workers' compensation, life insurance that they hadn't budgeted for. So writing all of these things down is going to be your first point of action here. First call of action. Space and operating, the same thing. After, if you want, you can alphabetize these. I don't know how familiar everybody is with Excel, but you just highlight, and then my dashboard is not showing up right now. But then you just go data and you just go sort, and then it'll start to alphabetize all of your space and operating if you want to do it that way. So carry over what you know you had, and then add in anything that you felt was missing as a result of answering your questions yesterday. We did the same thing for sales and marketing. We carried over what we knew we had, and I'm going to show you some things that we needed to add here. business credit cards and amortization. I'm going to come back. No, I guess we're going to talk about that now. Sorry, this is what you get when you get live video drills, right? Okay, so a couple of things I want to talk to you about. Don't worry, I'm coming back to all of these areas because there's a lot of expenses that we typically miss, and if you didn't catch them yesterday, I'm going to run through them today with you. Before we get into that, this is a big one that we often miss. So even yesterday with some of you, we talked about the fact that loan repayments weren't necessarily on your profit and loss reports, right? It's like, whoa, why not? So I'm going to get you to add these here, because if we're not budgeting for loan repayment, and then all of a sudden at the end of the year, we've paid out $25,000 in a loan, let's just say hypothetically, that's coming right off of our profit, right? So we need to plan for this here. So you will see in your spreadsheets, there is a loan disbursement area here. I'm actually going to ask you to split them up if you can. If not, don't worry about it, but split it up between interest and the principal that is actually being paid on that loan. So in this example here, you will see that this loan came into effect here in, I think it was June. And so the interest that was paid on the loan is $750, interest on loan one, $750, and the principal payment, which means the amount that you're actually starting to repay, is $1,390. They had a smaller loan here where their interest was $50, and then the principal repayment on that loan was $190. And I just see a question coming in. Should equipment lease payments be included? Absolutely. Now, I am going to suggest if you have an equipment lease specifically, you could either put it under loan or you could put it under operations. I would probably, what I've done in the past with companies like this is that I have put equipment leases under operations, and I have put, you know, working loans, operational loans just under here. It doesn't necessarily matter where we're going to put it now. We just need to get it into one of these line items, absolutely. So if you just want to put leases in here, you can, and the equipment lease, as we know, is a loan because it's going to be your asset at the end. Okay, great question. Now, one other piece that I want you to be aware of under additional expenses or other expenses is credit cards. So it has been my experience in working with entrepreneurs that we carry a lot of debt, a lot of business debt on our personal cards, or you might even have credit cards. So there is one other tool that I'm going to show you for you to be able to calculate what this expense needs to be by line here. So what we're going to do is, and I know I opened this up here somewhere. Here it is. So it is in the equipment room. It's in the planning for profit equipment room. If you have done the matrix challenge with me, this tool is going to look very familiar to you. But this tool is called the debt repayment calculator. And in this tool, you are going to be listing only the debt that is called revolving debt. So there's two types of debt in your business. You have term debt and you have revolving debt. Term debt is the loans that you have where the lender has typically set what the terms are. You owe us this much money, right? This is the installment debt, sorry. You owe us this much money on this date every month, and we are going to carry this loan for 5 years or 10 years or whatever it is. And at the end of it, you'll be, you know, you will have honored the commitment. So that is called installment debt, where it's the lender that decides on what the terms look like, and then you have to meet those terms. There's another piece of debt called revolving debt. And revolving debt is where the payments are quite flexible. You get to decide, other than when it needs to be paid and the minimum payment, you get to decide what you can do in that particular month. So I have put down here some examples. This is what I often see with a lot of business owners, that their credit cards, primarily business debt, right? So if you've got one card, and this is why it's so important for all of you out there that have personal credit cards and are putting business expenses on it, start to separate those cards. Make one for business expenses only, one for personal expenses, because the business should be repaying the business portion, right? The card that you have, the business expenses, and then the business should be paying you your salary so that you can take care of your personal expenses. But most business owners, it's like, blah, 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 especially sole proprietorships with debit cards. And I say this out of love because this was me in 2001. It was a big gong show, and my bookkeeper hated it. Plus, it got me in a lot of trouble. So separate them, divide and conquer is what I call that hack. So here, all you're going to do is you're going to list the loans that you have, sorry, not the loans, the revolving debt that you currently carry. Examples of revolving debt: credit cards, lines of credit, operating lines, right? CRA back taxes, sound familiar, anybody? Family loans, AKA love money that you may have borrowed to start your business. And accounting bills, again, I'm just calling it like I see it here. So oftentimes these are debts that business owners are carrying forward. You're going to write the balance. You're going to write your current rate of interest. And this is going to be an eye-opener for some of you. You may think that you may be charged, 19.99%. I had a member the other day say that she thought she was being charged 11.99%. And then having gone through the exercise, she realized that she's being charged 24.99. So just be aware of what your rate is. And then I want you to write down the payment that you're currently trying to pay, what your business currently looks to pay every month. Now, what you're going to find here is you're going to find a monthly payment of $1,800, right? When we add all of that up, we get $1,800. Now, as I advocate for in personal finances, I would love for you to get out of all of this debt, if you can, in 36 months or less. Because the amount of interest that we pay, the amount of money that we are throwing away on interest, both on revolving debt and installment debt, won't make you feel so great. So we've got to change that. This tool hopefully motivates you in a way to say no more. So again, here, what's going to happen is, what this is saying is that if we were to take an avalanche method, which is highest interest first, if we kept with our regular payments here, you will see that with credit card one that's at $16,000, it is going to take 38 months to pay off, and we will have spent $9,255 in interest. Yuck. Credit card number two, 42 months to pay off, $4,495 in interest. Yuck, right? At the end of the day, our outstanding debt is $74,000. We're paying $19,000 in interest. This is another reason why I want you to get planning for profit, because when you start to take that bottom line profit and you put it aside into retained earnings, we do not consistently need to borrow money anymore. Money at 6, 7, 8, 11, 24.99%. This is money that you could be investing somewhere at 10 to 12, right? So let's get this debt paid. So all you're going to do here is you're going to say your regular payments and paying down all of the debt right now, $1,800 a month. Our goal is to get this number down to 36. So I happen to know the number here, but you guys can play with this. If we now invest $2,400 a month in debt repayment, right? At the worst, all of our family loans, everything is paid off in 36 months. We're debt free, we're out. So you can play with this all you want, but I want you to come over here so that we can figure out what your debt repayment number is. No more minimum payments. So in this case, we've got 2,400. The other piece I can show you here is that there are, and I apologize for all the Matrix Challenge participants because this is redundant for you, but there's two types of repayment that a lot of experts talk about. One is called snowball and one is called avalanche. Avalanche is where you pay off the highest interest debt first, because the argument is that you're going to save more money long term. And the other method is what we call snowball, which means you take off, you start paying down the smallest, lowest balances first. So if we went to Snowball, you can see that the lowest balance was the accounting bill, right? So we get that paid off, and that's only going to take 4 months. Credit card number 2, right? So you can see the order in which they're going to get paid off. We're sitting at 34 months, but look at the interest paid in Snowball is actually $12,866. So in this specific example, it actually makes sense to do Avalanche first because we save an additional $3,000. Clear as mud? Clear as mud. The other piece I want to show you here is this next tab is you go under payment schedule. You can look at this, your bookkeeper, whoever's doing your numbers, this is actually going to show now that in addition to your regular $500 a month or whatever your payment was on these credit cards, it's going to show you exactly what extra needs to be paid on each one of these. So it's giving you your payment schedule. Pretty cool, hey? Pretty cool. There's some really heavy lifting in this calculator that gets done for you that I love. Okay, so that is how we are going to fill out that line item. So as an example, we would just put $2,400 here. I'm going to do this for you so that if you don't know how to do this, this is how you copy and drag. So if we are saying business credit cards 2,400 and we want to carry that along from January to December, we would now highlight that screen. So we've got a green square around it. And do you see this tiny little, there's a tiny little green square here in the corner. When you hover over that, you're going to get a plus symbol. And then you left click and you just start dragging it along and you take it all the way to the end of the year. It auto populates and it shows you $28,800 is being paid. So that is as simple as it gets with respect to dragging everything over. Okay, now that you have all of your labels filled out, now here's where you need to go and start understanding what expenses you are going to be putting in here. So when it comes to your salary, again, I'm going to send the link, but go to PayScale or another applicable app and figure out what your fair market salary for a general manager of your business is going to be. If you're a huge business and you have a team of like 60, 65 people, you may be looking for a CEO. I don't think we have any businesses like that on this call. So general manager should suffice at this point. You are going to know roughly what you have budgeted in the past because you have those numbers from last year. Last year, you have annual totals, right? So you're just going to take that annual total and divide it by 12 to give you a sense of what that monthly expense is going to be. But again, make sure that you're saying, was that the right amount that we paid? Was it too much or was it too little and we need to add some more to it? So I hope that that's clear for everybody. Another piece I want to draw your attention to is expenses that are usually big annual expenses like an accountant, right? Typically we get that accountant bill in March or April, or depending on when your fiscal is, could be anywhere from $2,000 to $5,000, $6,000, $7,000 for some businesses, depending on how intricate they are. So you have a couple of options. You can either say, you know what, I'm just going to show, and sorry, one other piece I should point out here. You will see that in this example, their months start from October and they're going to go to September. You can make this cash flow work with your fiscal year if you choose to. You can start your months and all you're going to do is you're actually just going to go up here and do it up here, and then it will auto-populate for the rest of your spreadsheet. So you can choose to do it on a calendar year, you can choose to do it on a fiscal year, or you can choose to plan now for this period, maybe next month or the month after, now that you've got a hang of it. So however you want to, however you choose to organize your months is completely up to you. So back to the accountant piece. In this example, you will see that I have basically amortized an accountant's fee of $3,720 because we knew that last year that's approximately what they came in at. And we said, okay, we're going to add a little bit of a buffer. And instead of just showing that that bill comes due in March, wherever March is here, March 3,700, right? we've just split that out between accountant. We've just split that out with equal payments of $500 per month. So however you choose to recognize it, for today, what I would recommend is just divide it out. Just split them out, and we've got a couple options afterwards. So before you make this too complicated and trying to figure everything out, and I was on the wrong line, so if we take 43, so accounting bill of $6,000, take your annual sums and just divide them by 12. We can fine tune this next week if you want to do that, but at least we know we have it budgeted for. Okay, please weigh in right now with any questions on putting in these numbers and putting in these labels. I don't see anything yet. I'm not done yet though, so don't worry, we still have time. Okay, now I want to take you over to expenses that I typically see forgotten. So one thing that you might want to pay attention to is when you look at your review and findings, you may have found that there was a bucket called other expenses. And when you look at it, it could have been really big for you. I know, there's one client that I worked with that their other bucket, other expenses, was like $227,000. And they were trying to figure out what the heck was that. And when we dug into it, it was actually like a catch-all bucket for about 18 different expenses that didn't get budgeted for in the first place, right? So huge learnings for you if you go to that category where a bookkeeper or an accountant just threw everything into other, because you've got to take a look to see if those are going to be reoccurring expenses for you as we start to plan here going forward. So expenses I usually always see forgotten, and I'm just going to check this question here. Yes, it does look a lot different because the one I'm showing right now, Nikki, is an example that I have filled out. But if we look at your forecasting for profit, this is what yours should look like, right? Step 3, forecasting for profit. It looks empty right now. It's like, what? Where's all the answers? I'm sure a lot of you are saying that. What the heck? You have to transfer this data over. And I want you to do that. I'm doing that intentionally because what I have noticed oftentimes is that when entrepreneurs get templates and all of these expenses are filled out for them, they just start saying, okay, well, I'm going to do that cost and that cost and that cost. And in many cases, the expense isn't even applicable to them, or they're forgetting everything else. But because everything was written down, it didn't force their brain, it didn't force their prefrontal cortex to actually think about what they needed to budget for. So that's why your example here is so different, right? There's no numbers in it. I'm asking you to do that work so that you can see that for yourself. I hope that answers that for you. Okay, so expenses that I usually always see forgotten. We talked about owner's salary. Let's talk about source deductions. So source deductions are the expense that the government is going to come after you for as an employer, for any employees that you have. So as the owner of the business, you have the option as to whether or not you want to be an employee and subscribe to Canadian Pension Plan, EI program, right? All of those pieces, or if you're just going to take a draw from the business and do your own pension piece, right? And your own employment insurance. That's what EI stands for. Now, if you do have employees, and thank you, Richard, because you mentioned this before, I'm going to put a tool into the toolbox. I'm going to see if I can find one for the States. The one that I have is for Canada. But in Canada, our government decides who's a contractor and who's an employee. And it is things like who decides on the hours, who decides what success looks like, whose equipment is being used, who actually defines the terms, right? Like, this is what needs to be done. Is it the contractor that says this is what needs to be done, right? Or is it the employer that says this is what needs to be done? So it's like, who's working with who here? Who's driving what? So there is a list that the government goes through to audit as whether or not these people are employees or whether they're contractors. I'm going to ask you that back to that. If you have been calling someone a contractor, and that's fine, right? In your world, oftentimes it makes sense for us because then we don't have all the source deductions. But if the government comes in and after doing this audit and going through this checklist, they determined that that individual is actually should have been an employee, they will charge you retroactively for all of the source deductions that that individual should have been paying from the point that they were supposed to be an employee. I have seen that shut down businesses. When CRA comes back saying, nope, that individual is an employee, that individual is an employee, it can compromise your business. So please go through that checklist. I'm going to get that in there today before 1 o'clock. I'm going to make that commitment to you. If they're an employee, I want you to budget for at least 16, if not 16 to 20% above and beyond what you've already negotiated for salary. We have to budget that for source deductions. So you can choose to just change the salary line item for that individual and say, okay, instead of $100,000, it's going to be 120. Or you can add a separate line item called source deductions. But I want to draw your attention to that. I usually always see there is, I can't think of one exception right now, where we forget about recruiting and training needs for our team members. You might have even realized yesterday that you don't have the right team in place, that you actually need to hire some people, right? Maybe you need someone to help with extra bookkeeping. Maybe you need a receptionist. Maybe you need administrative assistant. Maybe you need someone to manage your team, right? Whatever it is, make sure that you understand whether or not this person is a contractor or whether this person is going to be a consultant, and all of the work it takes to train them and recruit them, right? Bonuses, I always see forgotten. So let's look at bonuses. Cultural development, and what I mean by that is, especially in a small business, we usually don't have millions of dollars to be able to afford the bonuses and the big sales trips and all the employee recognition that some of these companies do. But what we can do is we can start to build a culture of appreciation and gratitude for the work that our team is doing. So one of my very first business mentors was actually Arlene Dickinson from Venture Communications. And every Friday, she would take out her entire team for yoga and then wine after. So the shop would actually shut down, and then she covered all the expenses, and that was a part of her budget. She budgeted for that employee welfare, that cultural development. So don't forget about this, because people, sometimes it isn't always about what they are getting paid financially, it's about how you treat them. As a small business, you need to be very aware of that. So make sure you're budgeting for it. Pizza on Friday, pool, whatever it may be. Professional development, especially if you're in an organization that requires this professional development piece. I oftentimes, under professional development, even safety audits, right? In construction, going and getting team members, what is it called? Not licensed, but making sure that they're up to speed on everything that they need as as an employee of this company, to make sure that they're meeting specific, not milestones, but you know what I'm looking for, specific needs and levels when it comes to safety. Coaches and consultants, do you need to budget for any of that in your business? All of this comes under team and personnel. Workers' compensation, right? Do you need to budget for that? If they are an employee, that's your obligation. If they are a contractor, they should be carrying some of this stuff. Benefits, right? I see a lot of entrepreneurs actually do, I guess they're called health spending accounts, especially in Alberta, because I think there's some tax opportunities as well. But benefits are a big piece, especially as your team starts to grow, because the bigger competitors, your competitors, are probably offering benefits. And an employee is going to be weighing all of this to go, oh, I could go down the block and get this, right? So you might want to be budgeting for this one. A big one that I often see forgotten is key man insurance. This is the insurance that's needed to make sure that if something happens to you as the key man, the key person, unfortunately it's called key man, but maybe it's changed now, key person insurance, if something happens to you, there is money there in the back end on the insurance side of it that can come in and make sure that a replacement can come in and run the business. Not something to take lightly here, so look into it. Meals and entertainment, this is usually one that comes up all the time, especially if you were charting the data. It's like, oh, was this a team meal, or was it a promotional meal, or was it an operational meal? So just figure that out. Overtime and seasonal needs, right? So if in retail, we usually take inventory once or twice a year, right? Do you need to budget for extra people at that time? Maybe if you're in accounting and bookkeeping, tax time, you need to budget for other people. Retail, we all know, right? Black Friday, this is where, you know, we've got lots of stuff going on, Boxing Day, making sure that you've got the right people and the right volume of people to be able to support the needs that you have, specifically with overtime and seasonal here. Okay, so those, and if you guys think of any others that I'm missing, I would love to hear from you on this. Actually, I just thought of another one here. I have found that as businesses get more sophisticated and as they start planning for profit and they're actually like, oh my gosh, this is working, money's coming in, what you, right? And they start to get a little, they actually start to panic a little bit that everything starts to work for them. Then they come back and they say, everything's been working, can you come in again? And I'm like, you know what, I don't think I need to come in, but what I'm going to recommend, because we know what your execution is, we can tweak your financials, but now it's only going to take an hour. What I usually recommend in this space now is an advisory board. So an advisory board is a group of individuals that don't get paid for their time, but each one has a specific area of expertise, whether it's finance, marketing, operations, industry experience, sometimes it's government relations, sometimes it's grant writing, right? Depending on your space, this board comes together and they will provide you with guidance and expertise and ask you all the tough questions to make sure you're operating like a viable business. So I've just said that they don't get paid, but one of the pieces of compensation is either setting up the meetings, right? Whether you're going to use Zoom, taking them out and treating them to dinner or to lunch. I know that 3 of the boards that I'm on right now, they actually do an annual meeting where we come together for 3 days. It's off-site and we work on their business, and that's it. And you'd be amazed at how many people would be willing to support you in that capacity, but just budget for it. So I think on average, typically their budgets for 4 to 5 people coming in, and usually, you know, I've gone everywhere from Manitoba to Banff to Vancouver. It's usually about $10,000 a year. And when you think about what they're saving on consulting fees and that accountability, I can tell you in this one example, not the example I've been showing, I think they went from minus 255 and right now they're sitting at a positive of 1,355,000, and that was in like 2.5 years. And that was with the help of an advisory board. So just something you might want to think about when it comes to budgeting. Other expenses I see: forgotten space and operating. Remember all of your software, even the little things like operating systems, right? Security, your virus scans, your backup, any sort of industry specific software you need, like CAD, the auto drawings, whatever that may be. Phone systems, especially if you're a small business, as you start to get bigger, you might want someone answering your phone. There's actually an app out there, or a system out there. It's called Ruby Receptionist. I think it's as low as $350. They personally answer all of your calls and then route it to your cell phone. Storage facilities, as you start to grow, right? And for some of you who have equipment, you know, do you need to now take on more storage facilities? All of your hardware, right? With respect to some of these smaller equipment costs. Equipment leases versus merchant fees. So the only thing, sorry, this equipment is going to get confusing. What I mean by this is that with your payment systems, they've gotten lumped together. But what typically is happening is that your payment system, if you take credit cards, you are getting charged a fee to actually rent that machine from Moneris or Global Payments or whoever it is, unless it's Square or Stripe, but you're getting charged a monthly fee to rent it. And then in addition to that, they are now charging you something called merchant fees on top of it. So transaction fees, which is a commission based on, for every transaction, they're taking 2.79% and probably more depending on what you're doing. We have to separate those two because one is a fixed expense, right? Operating expense, and the other one is actually attached to the product or service being sold. You're not going to get charged that unless something's getting sold. So I'm going to show you how to do that after. For now, if that's too confusing, just take the number, divide it by 12. Office supplies and kitchen supplies. I have to say, usually office supplies, I see these being under budgeted for. Just remember, an ink cartridge is like $75, and most people forget kitchen supplies, toilet room, bathroom supplies, right? Toilet paper, coffee, mugs, dishes, all of that sort of stuff. Cleaning supplies, make sure it's all in there. Maintenance, I see this one being forgotten. So window washing, snow removal, building repairs, all of that. Your memberships, professional associations, if it's operational, put it in there. If it's marketing, I'm going to show you where to put it under marketing. Your travel costs. So travel costs, usually in my experience, have been associated with sales and marketing. However, one example of where you would find that under space and operating is if you are fundraising. Right? So if you're looking for equity investment and you are traveling across North America, trying to, hitting up all the angels, going to all the pitch shows, this is where you want to budget for it. I'm going to come to equipment here in a minute. Sorry, I was just jotting this down before I started. Your inventory costs. So I know we're accounting for this in cost of goods, but I want you to think about if you need to top up your current inventory levels, or if you decide that you want to start getting into a different space, I want you to start, and by space I mean a different product line or different season, I want you to start thinking about, in addition to your cost of goods, right, and what's already coming off when we start planning cost of goods, do you need extra chunks of money throughout the course of your year to be able to invest in additional inventory? Capital expenditures. Do you need extra equipment, whether it's manufacturing, right? Whether it might be some of this hardware here. Real estate, do you need to get into that space or not? Furniture. So there's examples here of tangible capital expenditures, and then there's examples of intangible. I'm going to put this all in an email to you. So intangible expenses would be things like intellectual property, copyrights, patents, trademarks, all of those things. So if you see yourself needing to get into that space this year and the years forward, start thinking about it, right? So that we can budget for it. One other thing before I forget here, any sort of research and development, again, that would fall under space and operating, right? We could either put it here, or if these are going to be people in particular that are part of your team, we're going to put it under team expenses. I'm almost there, hang in with me. Sales and marketing, I don't want you to worry too much about this. Right now, what I want you to budget for is your if you have a marketing or business development consultant, this is the one caveat I have to team and personnel. I am going to ask that you put that person under sales and marketing, because like I explained yesterday, this individual, we need to see the return on investment of their time in. Right? If we have hired that person specifically for marketing, we want to make sure that our investment in them is going to be paying off and that we know what that needs to be. So I'm going to ask you to put this person under sales and marketing. Any of your common materials, business cards, promotion or brochures, pamphlets, whatever that may look like, meals and entertainment. So this might come in with a customer promotion. Website, your domains, your emails, your maintenance, your monthly subscriptions, right? CRM, Canva, video software like Animoto, social media content management software, whatever that may look like, memberships, marketing, business development, travel. I'm getting tired just saying all of these things. You must be exhausted listening to me. But again, I just want you to make sure that you're accounting for these expenses, because if we don't do it now, we are going to lose it on our back end, off of our profit. Our bottom line is going to get compromised. So the other thing that I'm going to put in here is marketing mix. And you know what? Don't shoot me, but I'm going to ask you to budget for at least $2,500 a month, if not $5,000. Because next week we are actually going to be building a marketing strategy that allows you to achieve the sales goals that we need to achieve to make these numbers happen. So instead of us having to come back and replan all of our numbers, I just simply want you to budget anywhere from $2,500 to $5,000 a month right now, just as a placeholder. And then if we have to, we can come back and we can reduce that expense. But right now we've got it budgeted for. Other expenses, we talked about loans. Amortization, I'm going to leave that for now. Let's come back to that a different day. You might already know your amortization based on your findings yesterday. Amortization, what it is it's simply the number that you are putting aside every month to be able to reinvest in capital expenditures, right? Equipment, furniture, whatever it may be, at the time that the accountant, although arguably this should be you that's setting the schedule for a number of reasons, we'll get into that another time. At the time that that equipment is no longer useful to you, this is money that you have been setting aside to make sure that you can repurchase it without getting new loans. So something to think about there. If you have it yesterday, if you've seen a line item called amortization, just carry that over. If you do not have it, do not worry about it. We talked about loans and contingency. I'd love for you to budget at least $1,000 a month. This is for any additional expenses that might come up. That's going to be $12,000 a year that we didn't budget for. So instead of it coming off the bottom line, we'll have a petty cash fund that we can now draw from instead of compromising on profit. Don't worry. You're going to be like, what the heck is this? This is a lot of extra expenses. These might not all apply to you, but again, I want you to start thinking like a CEO. And what do you need to have budgeted for so that your business runs smoothly, effectively, efficiently, and it's actually running like a business and not just this is just a job and you're trying to be everything to everybody and doing it all yourself. So this is a fun exercise. And again, don't worry, because I'm going to show you how we're going to plan to make those revenue goals happen based on what we need to see happen here. Okay, tips, did I even write in? Yeah, so don't compromise the integrity, efficiency, and quality of your daily operations. I'm trying to think, we talked about the CEO piece, we talked about the magic number. This is where you're going to carry that over. And I am going to be emailing this list to you of unforeseen expenses. Okay, I hope that that was helpful for you. Again, in your worksheets, you are using this plan to profit tool. You're using tab 3. I see here a chat, so
you've muted us all.
sorry, can you hear me now? Can everybody hear me? I think so. Okay. I am, sorry, I'm trying to multitask and I'm not doing a great job. You know what I'm going to do? I'm going to turn off, I'm going to unmute everybody so we can have a conversation now. I think that might be easier. Okay. And just Nikki, for your, what's happening here is the screen that you're seeing, I think you're just looking at the top of your spreadsheet, right? When you start scrolling down, then you get into general expenses. Does that make sense?
Well, actually, I went and downloaded it again. There seems to have been a corruption on that page. So I just have to start all over. It's all good.
Sorry, what do you mean corruption?
Well, I can text you a picture. It doesn't look right. Let's see if I can find it again.
Okay. Thank you. I appreciate that. Is anybody else having issues? All right. Yeah, I'd appreciate that, Nikki. If you could just share with me, you know, what you were seeing, I'll make sure that that's resolved for anybody, everyone. Are there any other questions that anyone has? There was a lot of information there. Hopefully not too much. All right. If you need to speak, I think I'm not going to start touching it because this is where I mess up with everyone. Just unmute your microphone and then you can weigh in. So yeah, again, today we're just looking at general expenses. We're getting into the team personnel, space and operating. If for whatever reason there was some issues with your template, please let me know. I'm going to double check on the back end just to make sure that in your equipment room, everything's good there, but I'm happy to email it to you if you're having some challenges with it. Okay, quiet group. All right, I'm going to stay here for another 6 minutes. Everyone, you know, if you don't have any questions, feel free to leave and get to work. If you do, I'm going to be here. Feel free to, oh, I see something in the chat. So, Janelle, your question, for some of the new budget items, are we looking at historic numbers to budget for future? Well, for the new budget items, you probably don't have any historical data from which to go from. So this is where you will be adding a line item, right? You'll be adding a new legend here, a new field under this area. And then, yeah, you're going to have to start thinking, okay, well, if we didn't budget for a social media content manager in the past, what should we budget for one now, right? And I can tell you, having done some of this work here, it's approximately anywhere from at least $500 a month up to $3,000 a month. Actually very expensive. So this is where you're going to want to do some research as well to kind of get a baseline for what you think those expenses are going to be. But historically, you won't have access to that data because you probably haven't budgeted for it before. All right, so Nikki, thank you for weighing in. You downloaded the template. It's looking fine. That's great. I bet you it was something that I probably did at some point too. So I apologize for that. So that's all working for you. I'm glad to hear it. I'm hearing one person. Thank you. So you're a little confused about today's task. Am I to estimate expenses based on what growth I want to achieve, or am I creating a budget on what I am currently, sorry, it cut off there, what I'm currently making and spending? Okay, so to answer your question, I would like for you, it's almost a little bit of a hybrid of both, unless you have been operating really efficiently given your current revenues. At the end, I don't want you to worry. We're going to come back, and if we need to make adjustments to our expenses, we'll make them. I oftentimes say that a cash flow forecast is like a piece of fine art where it's tons of layers. We're going to do this today, and this is not locked in stone, but it gives us a really good benchmark from which to start planning from. So I want you to definitely take a look at all of your expenses right now. I want you to think about where you've been operating really leanly and just kind of by the skin of your teeth, because we should adjust that. I would prefer that you over budget right now in expenses. And this isn't about where you're going to be in 10 years. This is about where you're going to be this year and next year. I would prefer that you over budget here because it's easier for us to take out the number, to reduce the number and not compromise the profit, versus having to add a whole bunch of extra expenses and then needing to do the exercise over again. So I want you to think about kind of a, you know, now and the next 12 to 24 month window, what are you going to need between now and then to make sure that you're operating efficiently? This isn't about huge drastic changes, but let's take a look. And once you get it, once you get this done, you can come back and modify at any time. What I'm hoping that you're going to do is actually do a projection for year 2, year 3, year 4, year 5. And as you start to grow, your income will grow and your expenses will grow as well. But let's just take a look at the next 12-month period so we can get that example locked in. So I hope that helps you with that. Okay, and I'm just trying to see if anyone else has put in any questions here. I think we're looking pretty good, gang. Okay, awesome. All right, and I see you're still hanging on. Trying to think if there's anything I can share with you to make your next 2 minutes extremely valuable.
I do have a question, Tanya.
Beautiful, bring it on.
With regards to our May year end,
Yes.
and as we discussed yesterday, I changed my year, so I did 2017, 2018 in the 2018 column.
Yep.
And then I'm thinking now I should take my expenses since last May and put it in the 2019 column. And
Okay.
then my forecast should be for 2020.
Well, we're in May now. So is this your May 2019? Do you call this May 19 or do you call it May
Yeah,
20?
this would be May 19 coming
Okay.
up.
So I would forecast for May 19 because you've got a whole year in front of you, Sherry, that we need to
Yes,
budget
but
for.
for me, that will, like, our first year was for 2017, 2018, till the end of May 2018.
Yeah.
Okay,
Mhm.
and that I put in under 2018 yesterday.
Mm-hmm.
But I have expenses from May of 2018 all the way up into today that
Right.
I should be entering also in 2019.
Okay,
see what
so
I'm
I think what I would recommend is that because historic is historic and
Yes.
this sheet today is all about going forward. So I would probably, in your charting the data, I would have, I'd have 17, 18 numbers, I'd have 18, 19 numbers, right? And then this forecasting for profit becomes your 19, 20 numbers. Right? So when you go through this, when you're now this time next year, when you're sitting down with Keith, yeah, then you're saying, listen, this is what we budgeted for, right? And you're going to be measuring this every month. We're pretty good because we've got May coming up and we can adjust the May numbers, but that's what I would recommend here, Sherry, is that I would start your months off with because you started May, right? So May all the way up until April.
So I should start with May 19.
Because that's your fiscal year, right?
Yeah.
Yeah.
Or June would be the beginning of the next fiscal year.
Okay, sorry, if June's the beginning.
Start with June?
Sorry, then I would start with June, yeah.
Okay, so then what do I do with the data? Because it's not entered yet. From June 2018
Yep.
to today.
I would put that into your historical information under chart the data and just put in that column, just move a column over because in the historical data you would have 18, 19, which you don't have all of those numbers yet, but once you get them, you can start putting them in there to see if there have been changes to your percentages.
Okay, I think I got it.
Okay, awesome. You guys are all doing great. This is not for the faint of heart. So you're doing awesome, everyone. Well done. Okay, any other questions? Everyone okay? Yeah, okay, I see everyone dropping off now. All right. Text me if you have any questions. I love them. I love that you're asking me. It helps me to know where everybody's mind's at. And tomorrow I'll see you and we'll start talking about revenue streams. And it's a light day tomorrow, so we can certainly continue on the conversation or the questions from today as well. Okay.
Do you rather texts or emails? Because I'd rather email.
Email is fine, but texting I get to see right in the middle.
I realize.
Emails are usually at the end of the day when I'm done with client sessions. So yeah.
Okay. If I have a quick question, I'll text it, but most of my questions are long.
Okay.
Thank you,
Awesome,
Tanya.
Sherry. Thank you. Okay. Have a great day.
You too. Bye-bye.
Bye. And Axel, I see you're here. I just want to make sure you don't have any questions. You're okay? All right. Okay. Thank you, everybody. We'll see you tomorrow.